Welcome to TradeTheMBI.com. This is John. This report is for the 3rd of November. Well, here we had it. We had a little bit of softness from the magenta had moved below yellow on the daily here, and we were expecting some softness. Well, we actually got a little bit of a pump going into it, and then the Fed spoke, and that changed everything, which we kind of figured was going to be the case, and that's why we were suggesting looking at the intraday as we were moving forward. Because modest softness would have been expected. The reality is that we get this bifurcation. For the longest time, a decade plus, everyone's like, "Don't fight the Fed." It's always right, and of course, but for some reason, no one wants to believe the Fed that they are going to do what they say they're going to do this time. Uh, you know, they're always changing what they believe the targets for the Fed are going to be because what they can't believe is that the Fed would go on the course that it's going because they understand the economic impact of that course, and it's quite draconian. Uh, from an economy standpoint, there's just no question about it. But there was never any question that there was going to be a recession. It was just a question of how deep and how bad. And is the Fed going too fast? There's a serious argument to be made that, but they're so late, they have to kind of catch up, and that's really was the problem. Is they missed the window at the start of the year to begin this, and it might have had some impact. I don't know that it would have changed things because most of this is arbitrary inflation because of sanctions and political discretion. Uh, I think that this was 100% avoidable in all cases. There's just no question about that. When we look at the NQ, you're still, well, again, steel on the DOC below science, so it's a little bit weak there, and we're also shakeout super negative from the Nasdaq, but the Nasdaq has always been weaker. So any of this weakness really just started to spread through to the S&P, and it's just a realization that things are going to be a lot tougher from a macro standpoint, and that's going to have its impact on companies. There's just no way around it. Oil still maintaining. Now we're approaching the 90 again. You get back over that threshold, and that creates a whole other spark of problems because instead of inflation being either maintaining its current rate, you'll have an acceleration again. And what we're really looking for is when it starts to bite the consumer, when you're seeing a reduction in the number of people buying and or doing activities that would otherwise be considered luxuries, and that's usually how it begins, and then it starts to snowball because those small businesses then lay off, and it just becomes a repetitive thing. And of course, looking at the ridiculous euro valuation here, down to 97, it really does have a ways more to go simply because there's just not a whole lot happening in the eurozone to justify it keeping there. And even TLT at this point, 96 is still relatively high. I think it should be in the 93 range simply because of what we're seeing from a rate profile. But it's in a negative signal right there. But these are always ones to watch on the MBI. And actually, I should slide that one over where you get this initial decline, white spikes, but you didn't get the magenta dipping below yellow is usually the strongest manifestation of decline. Otherwise, this becomes one of those where you get some softness and then it spikes back up, and that can be problematic to say the least. And of course, cold suffering on that sell off that took place, no surprises with that. And then Bitcoin and them again, this is important because you saw what happened with the market and you're looking at the relative stability within Bitcoin and that. And that's just making the argument of what I was saying about um, the crypto space and the changes that we've seen in both, Ethereum and Bitcoin over the last many months as they've become more stable and less volatile, which is exactly what you're looking for if you're talking about an alternative currency construct. The one like the idea of the wild moves, but those wild moves are actually the very thing that scares off most people because it's not what you expect from uh, well-mannered currencies. Let's just call it that. From a 50K standpoint, that's all boom. Look at that magenta candle there. Got a little bit of a pop back up, but took the short right at the top of it right here, and boom. Intraday was even more fun. I think there was a lot of excitement because we ended up with this very soft, and we were talking about this on the Skype chat, was the relative power of when we see these breakdowns begin from these accelerated levels, and how sometimes you'll get that bounce that'll come back up. But once you get that break below the 25 of the MBI magenta like that, usually becomes pretty consistent. So let's just follow along. It doesn't spike back above 25 until all the way through here. I mean, that is an excellent run in order to maintain a short uh, position going through. And not that it changed all that much because there was no reset of steel until we got right about here. Steel resets below cyan and then makes its resurgence, and lo and behold, you get a little pop. It wasn't much, but it was corresponding to that reset. And then we just kind of based a little bit, did the same thing back and forth. Continued breakdowns were pretty easy every time it dipped below that 25, and then turn around, and then we caught the nice move in the anticipation that the Fed was going to change their minds, and all we did was move up to the previous algo, the 38.93. I mean, we're just, you look at the range, it was right between both of them the whole time. And then we got the rally right in between this upper level. And so you can see where there's like an activation too, that additional algos kick in when they get to certain areas, and that just helps push a move. And then they begin to liquidate going across, figuring they've got the new buyers. All falls apart right there. They make another little bounce and continues to break down. And then that breakdown was the beginning of a much broader breakdown that never ended. There were still attempts to make rallies. I mean, all these little pop ups right there led to additional breakdowns. And what the difference I look for when seeing some of these pop back moves is whether or not they get towards positive extreme, particularly as you're getting into that 50% mode. So right here, I'm developing just about a positive extreme, and that's where I'm just looking for a breakdown below yellow on the MBI, making sure the DOC cyan is above, and never hurts to watch that declining red as well. And you can see the effect. And you got beautiful ABC runs to the downside instead of the upside. And we just filled back all of these other positive extremes that had pre-existed, and we're just kind of floating on there. I just don't know that there's a whole lot of impetus to um, drive price, demonstrably higher in the sense of major rallies. Of course, just like when we have the big up rallies, I always point out you've got to have the exact same on the downside. So you'll get pops that will take back up a portion of this, assuming sentiment changes at all. But I don't think it will. I think that this realization is starting to set in with the broader market class that has been sort of denying it for a long time. The interesting thing is you now have a lot of companies, and this is what I was mentioning before, they're freed up with cash in that. My view is when they have uncertainty like this, and economic times that are in such volatile condition, um, you don't do anything. And so you hold on to it. And it's in that freeze that you really start to see a recession take place because that paralyzation of activity is, well, it's the lifeblood of the economy. As soon as it's not just one or two, someone will say, oh, let's just do a little bit less. It snowballs. So that's the broader scope of things. As always, though, look for me on the Skype chat. Trade well. I'll talk to you later.